Welcome to everyone. In this week video you will learn how powerful and profitable are the cycles, and how to use them to trade the gold market to increase your profits. This week video will cover the gold market for the week of May 6, 2024. Before we start, make sure you read carefully the disclaimer. The gold price reached an all-time high on April 12 at $2,448. The GLD ETF $225 the same day. Since that high the gold market start a correction. Let's see which cycle peak it could be. Let's start by the 20-week cycle. The all-time high occurred right on the cycle peak, the red dashed line. If this is the peak of the 20-week cycle, then we can expect a neutral cycle or slightly bullish. A neutral cycle is when the cycle low is close to where he start. This 20-week cycle started 183.78 in mid-January 2024. But technically, the gold market should find support on his cycle line. If the gold market reached the $183 mark, then there is a lots of bearishness coming to the gold market. But for now there is no signs to confirm this possibility. And the low for this cycle is expected mid-July. Like mentioned above, at the time of the 20-week cycle low, the gold ETF should find support on his cycle line. A cross below his cycle line will be a sign of weakness in gold market, and in this case we can start to consider it the bearish scenario. But the first sign of weakness will be in the next lower time frame, the 80-day cycle. If the gold ETF cross sharply below his 80-day cycle line, this will be the first warning. We have also to keep an eye on the cycle trend line, what's first called a VTL, the green solid line. When the gold ETF cross below it, then this will mean the 40-week cycle peak has formed. In the meantime, for this week, the cycle trend is down. The success rate is 100%. Let's see the 80-day cycle. The low for this 80-day cycle was scheduled for the April 22nd. He looks like this 80-day cycle run little bit longer than expected. There is a high probability, the May 3rd low is the 80-day cycle low. This cycle is 78 days long. 10 days longer than the average. On the Hurst nominal model, the length for the 80 days is 68 days. This decline for the gold ETF was expected. Technically at this stage of the cycle, the gold ETF supposed to find support on his cycle line. If the gold ETF cross sharply below his cycle line, first, this will provide a downside potential target. And second, this could be the first sign of weakness in this gold market. If the May 3rd low is the 80-day cycle low, then the next one is expected to occur on July 10th, the yellow zone on the chart. The 80-day cycle low is due by now. For sure the April 12th high at 225 is the 80-day cycle peak for the gold market. Where are we on the roadmap? Just as reminder, the cycle line used on the roadmap is the 20-day cycle line. Since we are finishing an 80-day cycle, we are right there. What's next for the next 80-day cycle? Let's assume the 80-day cycle low is on time on May 3rd. Like mentioned in my previous update, if the market make his low after the May 3rd, we have to change the date by the same amount of days. So we will get the confirmation of the low when the gold ETF will cross above his 20-day cycle line, providing an upside potential target and form the 20 days peak. Then the gold will start a correction to form a low on May 20th, finding support on his cycle line. If the gold cross below his cycle line at that time, this will be the first sign of some weakness of the gold market. The gold ETF will rally and form his 40-day cycle peak. To stay bullish, the 40-day cycle peak have to form on the right part of the 40-day cycle. Then after his 40 days peak, the gold ETF should cross below his cycle line, providing a downside target for the 40 days cycle low on June 6th. After the 40 days low, the market will cross above his cycle line, providing an upside target for the 80 days cycle peak. This peak should form on the left part of the cycle, or at the best, right on the cycle peak. After the 80 days cycle peak formation, the gold ETF should cross back below his cycle line, providing a downside target for the next 80 days cycle low. forming a first low around mid-June, then rally toward his cycle line, using it as resistance before heading down to July 10 to form the 80-day cycle low. This 80-day cycle will form at the same time the 20-week cycle low. At that time, the gold ETF should cross below his cycle line, providing a downside target. The success rate for the 80-day cycle is 63%. Since we start a new 80-day cycle, the cycle trend is up. The 40-day cycle. The last 40-day cycle low occurred on March 19 with a low at 198. The next one was expected on Monday, April 22, but looks like he run little bit longer. The 40-day cycle low is due by now. But there is a high probability it occur Friday, May 3rd. Since the cycles are synchronized at their lows, the 40-day cycle will form his low at the same time than the 80-day cycle. In my last update I mentioned. Technically, since he is the second 40-day cycle since the last major low on February 14. The gold ETF supposed to cross below his cycle lines, providing a downside target. On April 30, the gold ETF crossed his cycle line at 216, providing a downside target at $207.51. $8.79, or 4.06% as potential profit. But we have to remember the 80 days, and at the same time the 40-day cycle low is due now. Unless a very sharp decline occur, there is a possibility the target won't be met. The April 30, the gold ETF also crossed below his cycle trend line, the blue line. Confirming the 225 all-time high is at least the 80 days cycle peak. The next 40 days low was expected for June 6, but since the cycle run little bit longer, we can expect it to form later. The peak for the next 40 days cycle is still expected on the right part of the cycle, after the red dashed line. If the peak occur before, this will mean the gold market start to show some weakness. The success rate is 100%. When the actual 40-day cycle low will be confirmed, I will draw the 40-day cycle trend line to help to identify the next 80-day cycle peak. The 20-day cycle. The last 20-day cycle low was scheduled for April 21. On April 23, the gold ETF formed the 20-day cycle low at $213.87. The low was 2 days late. The next one is expected to form on May 10, the yellow zone on the chart. On April 22, the gold ETF crossed below his cycle line at 216.44, providing a potential downside target at $207.79. $8.06, or 4%. The 207 target should be an important support, since the 40 and 20-day cycle get the same target price. What's next? After forming his next 20-day cycle low, the gold ETF should cross above his cycle line, providing a potential upside target, confirming the 80 days cycle low. Depending how fast and if the gold will reach his target, we will see how much weakness we have in gold market. This week the cycle trend is up. The success rate is 100%. The 10 days cycle. The last 10-day cycle formed on April 23. The next one is expected on April 30. The low is formed on May 3. This cycle run little bit longer. On April 22, the gold ETF crossed below his cycle line at $219.05 for a potential downside target at $213. $6.04 or 2.76% of potential profits. Next day the gold ETF meet his target with a low for the day at $213.87. The success rate is 88% and the trend cycle is down. In conclusion, we start to see some weakness in the gold market by the extension of the cycle's length. The 20-week cycle peak should form very soon. To confirm the 20 weeks peak is formed or in formation, we will watch carefully the gold ETF reaction when he will be near the 80-day cycle trend line. When the gold will cross below, this will be the first sign. In meantime, despite showing some weakness, the gold market still in bull market. If you like this video, please click on the like button and subscribe to make sure you don't miss any future important videos. This is the end of this week's video. Thank you for following me. Next week, I will publish another market update. Welcome.